Celebrate. Connect. Arizona Hispanic Connection.
Welcome to AARP, Arizona Hispanic Connection. This is another show with another important subject. Today, we have life insurance, concepts, and types. So I have two very important guests with me today. They both handle this issue of life insurance quite well. So I'm going to ask them to introduce themselves, as I like to do, because I think it's better. They send me what they want me to say, but I think it's better. That way you can get to hear from them faster, because I speak too much. So first, Yoli to my right, go ahead and introduce yourself. And as you do, let me just make sure that this camera is fine. But go ahead and introduce yourself if you don't mind.
Of course. David, thank you so much for inviting us, and definitely for the service that you do for our community. It is so important. Again, like you said, my name is Yoli Aleman Rodriguez. I have been with State Farm for 26 years. It has been a fantastic career. And anytime I have an opportunity to provide service to my community, I'm game. I'm so grateful to be here. Thank you.
Perfect. And John Herrera, you have a program in this station. Is
Yes, I do.
By yourself?
It's my program, Mi Dinero Tu Dinero. We've been here for 6 years already.
Perfect.
But this is so important to the Spanish community know what is the value of the life insurance. As a Jolly, we are able to offer any kind of insurance, auto, home, business, etc. But I am a believer in the life insurance. So the Spanish community need to know more in detail and more deep what's the importance, what's the life insurance, why every single person should have life insurance. Thank you for your invitation. And this program, Spanish Connection, is Arizona Hispanic Connections.
Perfect. Thank you.
Thank you.
All right. Well, first of all, let me open the phone lines. Let me tell you that if you have a question, I think it would be great. I just had a show on Social Security on Tuesday, and I received, I think it was something in the neighborhood of 20 calls during the show, and then a few after the show. So if you have any questions on life insurance, 602-759-1910. 602-759-1910 is the number. Many of you who listen to this station regularly already know it, perhaps by heart. So feel free to give us a call and ask your question. Let me see if I don't have any message. So hopefully the audio is coming out good. All right. So here we go. I'm gonna basically ask you some questions, and I'm going to ask you to basically have a conversation about life insurance, because just like when you want to talk about funeral services, nobody wants to talk about, or, funeral dying. It's something that we tend to not like to talk about. It's, I guess it's something that it's not very attractive. And it almost seems like life insurance is similar. And I'm sure that you will be able to tell me whether I'm kind of on the right track or not. But is it that there is kind of like a resistance for us to consider life insurance in our planning for the future? Yoli?
There is a stigma at times with people that are not very familiar with life insurance, but the benefits will always outweigh any type of conversation that makes individuals feel uncomfortable. The purpose of life insurance is to ensure that the family continues to live that standard of living that they are accustomed to. It is so sad to see families in the corners with flyers or pamphlets saying,
car wash.
"Help me, I'm washing your car today. Please help me bury my grandma. Please help me bury my aunt." That's not necessary in any community.
Okay.
If we plan, then the standard of living continues. The idea is to get most of the normal daily expenses covered, maybe for a certain period of time. So life insurance is critical, even if it's just for a funeral.
And perhaps today we will change some minds, some concepts, and that's my hope, including mine.
Yes.
Because I do not have life insurance at the present time. And so maybe you'll make a believer out of me. Who knows? But I'm going to present to you a few, at least 2 or 3 cases of how life insurance would apply. I have a daughter with her own particular situation. I have a son with his own particular situation, and then I have my own personal situation. So I'm sure that we can use my case. If you, I'll put myself on the table, so to speak, for your surgery.
Sounds good.
And John, what is your sense in terms of how Latinos are understanding this concept of life insurance? Is there still a little, I guess, resistance, or are we getting there?
No, we are not getting there. I believe so. I didn't been so long like Jolly, but in these 10 years, basically my main customers are the Spanish community, and they're reluctant to get the life insurance. As you say, and Spanish as well. So sometimes we believe that we are not going to die and we're invincible. And if we are young, we don't believe in the future, and we have that kind of believe that it's bad luck if we get the life insurance. It's because I'm going to die, my wife is going to die. Some of the Spanish say I don't leave money for the Sancho. Some of them say, no, I don't think so that I should be get that. If something happened to me, my kids, my family is going to take care of that. And that's when we say to the Spanish community more than the other communities. Like the Anglo community, they know the importance of the insurance. And of course, the life insurance is part of the portfolio for any financial kind of package that the families have it. And the life insurance is one of the most important, probably is the most important. Even more important that have the full coverage in the auto, have the extra coverage in the house.
Wow, that important, huh?
Yeah, life insurance. And it's important because I guarantee you, David, you're going to die.
That's for sure. You. That's for sure.
So you are going to need final expenses.
Yeah.
You probably want to leave some money to your kids, your family, or your library, or your church.
I think that the more we understand the concept, perhaps the more our thinking will change. So we're going to start doing that in the next segment. I'm going to ask you to explain what is life insurance, what types are they available, are they available just one for everybody? Can you do one for some time and then transition to another one, and so on and so forth? But now we have to go on a short break. Stay with us. This is AARP, Arizona Hispanic Connection. The subject today, life insurance, concepts and types. We will be right back.
Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for staying with us. This is AARP, Arizona Hispanic Connection, life insurance concepts and types. We've kind of briefly talked about the concepts. I believe this is a difficult concept to assimilate, and especially if you think you don't have money, because that's basically, I'm sure you hear this comment, I barely make ends meet. How in the world am I going to be thinking about life insurance? But perhaps when you tell us that it could be affordable and prices and this and that and the other, perhaps our minds will change. And gradually we are. And actually, if you are listening on the radio and you have perhaps you had a change of mind where you didn't believe in insurance, now you do, and I mean life insurance, give us a call, 602-759-1910, 602-759-1910. Meanwhile, we will continue to develop this subject. So let me ask you, first of all, help us understand terminology. So what are the parties involved in a policy? Who is who in a policy?
Okay.
Yes.
So The types of policy initially, there's really two types of policies.
Okay.
And it's the term policy, which is a time-sensitive type of contract, where you have a specific need for it. For example, if you were to purchase a house, you want to ensure that upon your death, that entire house is paid for. And you took that loan for 30 years. Well, a basic thing to do is to go after a term-based life insurance to make sure that should anything happen to you, the house will be paid for.
Okay.
There are no additional bells and whistles.
So
you don't
this
get
is
your money back.
So this is a temporary
For 30 years.
So there's a policy that is a temp for a period of time.
Yes.
So you want to make sure of what on this temporary policy?
That's all you're going to be using it for, that there is no additional need for this. So if you're going to decide that after 30 years you have your portfolio very well in line, whether it be rental properties, additional whole life insurance, additional means of producing income, your 401k, hopefully Social Security, and other areas that you're not going to have a need for an income-producing life insurance, then that would be the term. But keep in mind, that's exactly what it reads. The contract reads, after 30 years, we're going to say goodbye to you, right? Because the 30 years are over.
Right.
If you would like to renew, you will renew at age 65 or whatever age you are now. Say you started out the
you
policy
can
at age
renew
35.
a temporary policy once it expires. You can renew it for a different type of policy, perhaps?
For example, say that you are 35 years old when you get your house. That's a good age to get your house, 35. And you take the policy, the term policy for 30 years. So the policy is going to end at age 65, right?
Okay.
So it will be in your interest to renew it. But what happens, you're not going to get the rate of a 35-year-old.
Right.
You're going to get the rate of a 65-year-old.
When you renew it?
Yes.
Ooh.
So now those rates are going to be very high because the mortality tables are skewed towards the end. As you get older, it's more costlier. That's why it's so important that younger people lock the rates and the continued premium for the next 30 years.
Got it. So, okay, so number
That's
one, we have one type of life insurance that is temporary. It's term. It's called term, term life insurance. And then there's the
second one, which is the permanent, which is called the whole life insurance.
Or whole life or permanent.
Yes.
Okay, let me come back to John. John, okay, here's a young lady. She owns a home. She's not married, no kids. She's, say, 30 years old. What type of consideration should a person in this kind of situation have?
It's we, the insurance agents, we do something that we call need analysis. So all of that characteristics that you mentioned, a single person, 30 years old, that don't own a house, have no family, and also we're asking if they have some debt. Also, we are asking if they have some final expenses or saving money, 401k or money aside, in order to try to qualify in what is the need. Some people, same lady, 30 years old, maybe have a property that worth $500,000 and have debt and credit cards, have an auto, and maybe have the mother that she is the one that is going to take care of her. So the need analysis is very important. But going back to the point, if we have a female single with a 30-year mortgage for a $200,000.
Okay, but let me stop you because we want to make it very practical for people.
All right.
So here's a young lady, 30 years old, has a home.
Yep.
What is a something that she wants to make sure that she, I guess, insures, right? Insures. What? So
basically, as I said at the beginning, everybody is going to die. You're going to die, and this lady is going to die.
Right.
So the first thing, she needs to take care of the final expenses. So the final expenses...
So a young person like that, should she be thinking about death, or how about the mortgage?
No.
If she has a home...
Mortgage is important, but I think everybody, even since they born 1 year old, a couple of months, 2 years, 20 years, they're going to die.
Okay.
And they're going to need final expenses.
So if this person... I assume that it's better to be holistic, right? Think about the final expenses at the end, but then you have a mortgage here. You don't have kids right now. So are we talking about a term in this case, a term would be a better fit for that person?
It would depend, David. And that's the reason why a good financial analysis, like John was talking about, is part of that very important initial conversation. Because we have very savvy millennials that just bought their house for the first time. They could be in their mid-20s. They've graduated. They have great jobs. And what is highly recommendable is that we have that discussion. Would you like to get accumulated cash values? Would you like to get a policy that returns all your money back at age 65 or 20 years from now? What is your plan? Do you want to go minimalistic and just straight up just pay for this policy and get no money back? Or would you like to have a good 50, 60, 70,000 at age 65 with the option for you to cancel that policy instead of the policy canceling you? When you were mentioning that a lot of people do not venture into life insurance because they believe it is so expensive, part of the conversation is, can you do without 3% of your income? Because by having a pie of 100%, removing 3%, setting it aside to guarantee that should something happen to you, all of your debt, your home, and everything else that's involved will be paid for. Is that important to you?
Right. And
then also get your money back plus accumulated cash values.
Okay, so now from what I gather, a life insurance policy can include cash that you can basically almost like an investment too. Am I correct?
Yes, that's the whole life policy. Is one that
I still would like to bring you back because I am putting myself in the audience's shoes right now.
Right.
Okay, I'm trying to see what's being communicated, and so I wanna get you. I know that the analysis is and it has to be, and I know that you have to do it, but I just wanna bring it to the simplest form, so that the audience says, "Oh, maybe I'll think about that." So
I got it. I know what I'm going to tell you. Okay. So owning a life insurance that is term is like renting an apartment. At the end of that lease, you're going to walk away without an apartment. That's the term policy.
But my question is, this 30-year-old young lady has a home, is paying a mortgage, no kids right now.
No kids. Yep.
So what is one thing that it should be important, or at least that she should consider?
So that's where I was heading, David.
Okay.
So option number 2, you have really two options, two very basic options. Young lady, at the end of the 30 years,
right,
would you like your policy to continue at the same premium with accumulated cash values that you've accumulated during every payment that you've made to this policy, and have a policy for the rest of your life?
So let's say no.
Oh, and you say no, right? Okay.
So they said, no,
So
I don't care about
option-
cash right
okay.
now.
Right.
What else
So
can the policy do for
So
me?
the other option, which would be a term, say, okay, then you pay the least expensive rate for 30 years,
Okay.
and you just walk away just like you would walk away from a lease in an apartment. When you walk away from the lease in an apartment, you don't take the apartment with you because it's not yours.
So basically, if I'm concerned, let's say that this person is married. I'm concerned that I'm going to leave a mortgage unpaid if I died. So is the thinking, let me guarantee that at least for this time that I'm going to be paying this mortgage, I want to have a peace of mind that if I pass away, my spouse
get paid.
Yeah. So is this a consideration?
Yes and no.
Okay.
Yes and no. Why no? Because the beneficiary of this life policy probably is going to say, I don't want to live in that house. I don't want to pay that mortgage. I want to move to my country. I want to use that money for vacation.
But you're getting too hard on me.
The beneficiary is the one that takes the decision.
But
you can take on life, but yes, the mortgage can be paid. The mortgage can be paid with the life.
I want to bring it to basic and then move broader.
So David,
if this person is concerned that she might die and then leave the husband, let's say that the husband doesn't work or vice versa, and says, you know what, I'm a little concerned. I want to make sure that if I die, my spouse is not going to lose the home.
Right. So under both policies, the death benefit will be paid to pay off the home if the home was one of the main purposes why the life policy was obtained.
Okay.
Now,
so there is such a thing as a policy to basically just cover the mortgage loan.
Yes.
Is that okay?
And then there's the options, whether you want your money back. It's almost like a hamburger, right? Do you want pickles? Sure, let's add pickles.
Okay.
Do you want onions? Let's add onions, right? So it could be just your basic policy that you say, I just want to pay the minimum. I just want a bun and I want meat. And that's it.
Is it
That's a term.
Is it logical to think that this young lady says, you know what, I want to pay my mortgage in 20 years, not 30, so I just want to buy a term policy for 20 years
Absolutely.
to be able to secure that if something happens to me, that mortgage is going to be covered, so my spouse doesn't have to worry about it, and they can keep the home. Is that
Absolutely.
Is that logical to think?
And that is logical.
Okay.
And then if there's somebody who's on a very strict budget and that's all they can afford, because term insurance is fairly inexpensive. But when we say inexpensive, then they end up paying it on the back end. Because now, fast forward 30 years, fast forward 20 years, that 35-year-old is now 55-year-old.
So that person would have to basically not be planning to buy another policy, because then he or she's going to get hit by a higher premium because of age.
But but this is something important. Life insurance, you can have as many life insurance as you wanted. You
Policies?
Can have,
Policies?
You can have life insurance in your job. You can have a whole life insurance, which is permanent for $20,000 or whatever amount. And you can have $1 million term insurance for 10 years. So you can have 3 or 4 life insurance in place, and all then are going to pay to your beneficiary. If you want that the mortgage can pay and the bank be the beneficiary, you can do that. So you can tell this bank A, B, or C, if something happened to me, pay off the mortgage, that could be happening.
And then if nothing happens in those 20 years, and then that's the policy ends and it's over, right?
Thank you very much for your money. But if they have the combination of whole life and permanent, which is what I personally have it.
And we will talk about probably in the third segment about the combination. Right. So on the next segment, I would like to paint me a little scenario of a young man who's married. They have kids. And they also have a mortgage. So what is the consideration? Stay with us. You are listening to AARP Arizona Hispanic Connection. The subject today, life insurance, concepts and types. We'll be right back.
Welcome to AARP Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for staying with us. This is AARP Arizona Hispanic. We are having a good conversation, but this just kind of shows that it is kind of difficult to grasp these concepts.
Yes,
and bear with me because I want to bring it to the simplest form. So a person who owns a home just started to pay, young person, a consideration is to think about there is such a thing as covering my mortgage in case I pass away, so my spouse can still own the home. The insurance will be able to pay that home. Right. So let's say a scenario where a couple, they just got married, they own a home, and let's say they have a couple of young kids. What are some of the considerations in that scenario, in the very in a basic form?
So back to the analysis would be that certainly we would want to ensure that the home would be paid off. Okay. Any larger debts, such as the cars, such as the credit cards.
Okay.
Additionally, let's talk about the income, because when a person passes away, especially the bread earner, right? It's not just that the person is passing away. Their earnings are also being buried. Their employer is not going to come in and say, well, let me pay you XYZ's monthly income that he was making. So we have to look at the children now and say, okay, so the mother needs to stay with the children for maybe the next 5 years still before they go to school. Okay. So let's include the income. Say the father was making $50,000. Let's multiply that by 5 years to secure that the income is going to continue to come, so that the mother has the opportunity to go out and get an education if she doesn't have one, or to open up a business to ensure that within 5 years she will be up to the standard of living making her own money.
Got
But
it.
this will provide that. Additionally, the
Yeah.
education for the children. Education is not cheap. So let's plan for the next 10 years. Now the children are going to be 18. Let's make sure that we have included education in that plan.
Okay.
And lastly, the final expense, which is very expensive, anywhere between 10 and 15,000.
Yeah, I'm not necessarily denying that you need to get the whole enchilada, ¿verdad? But what I'm saying is that considerations, like you want to consider that mortgage, you want to consider the kids' education,
Right.
You want to consider the income that a person will need if they suffer the loss of the spouse, for
To
example.
continue the standard
Right,
of living.
The standard of
because
living.
you can go from having this beautiful home of your dreams to being homeless
Right.
in a flash of a second.
Right. Perfect. We got the audio back. So again, I like it. I like it very much because now, in my case, I don't have children anymore.
Right.
I almost don't have a mortgage anymore. I have my Social Security. I have 401k at work. Luckily, AARP offers a pension. So in my estimation, I am pretty well covered, and my spouse as well. What am I missing in the realm of life insurance?
Well, in the life insurance, that's why it's so important to start early in the age. If you was 20 years younger, probably you didn't pay your home at this time, and probably you need that coverage that you mentioned on the mortgage.
Right.
Or maybe you have kids that are not in the age of the 18 year or in the college, so you need that kind of protection. That's why it's so important, the need analysis. But there's something else. Why, if you want to leave some legacy to your family? Some people say we're poor my whole life, so I want to leave the next generation rich. I want to leave $1 million to my nephews.
Okay.
Why not? I want to leave some money to charity, to my
So
church.
that's where my scenario, that would fit in my scenario. So now I'm not worried about a mortgage. I'm not worried about kids going to school. My kids are grown-ups. They have jobs. But then legacy comes into play, correct? Am I getting it right?
Exactly.
That's correct.
And
Okay.
in addition to what John has said, it is important to look at the market and to look at your age. So how many years are you out from retirement? Are we talking maybe 10 years, David?
Let's say yes.
Okay. So now, because your situation is somebody that comes late into the game of life insurance,
Got it.
right? We need to look at most likely something that's going to be permanent. Not just temporary. And what you may want to look into is accelerating a whole policy that you can pay within the next 10 years during your income producing years so that you don't have to pay for a life policy while you're in a limited income during your retirement.
Got
So
it.
can we accelerate your payment so that you can pay a whole life policy in full within the next 10 years?
Right.
So that is critical. So now we know that every 10 years, in looking back through history, the market just takes a
Right.
huge dump,
Right.
right? It goes down, and if you were to have money in investments, you're not really in a position to be doing investments because the market was probably going to go down.
Right.
So the whole life policies guarantee a fixed interest. So you will continue earning.
This is the permanent
Yes.
whole
Yes.
life policy with a cash value.
Yes.
Am I correct?
And a clause that says that it will be paid for the rest of your life within the next 10 years. So you can be 100 years old. The policy will continue growing. Your accumulated cash values will continue to grow, and so will your dividends. So say at age 67, you're like, I am so excited. I'm going to take my wife, and we're going to go to Hawaii to celebrate my beautiful life working.
Or to Cuba.
Yes, to Cuba. There you go. Right? You
I
wanna
prefer to
take
go
her
to
on a
Cuba than
cruise.
Hawaii.
Well, you can take your dividends and go off, and guess
Right.
what? They're tax free. They're not going to be taxed.
Okay.
So that's
Got
another
it,
benefit
got it.
of
And
having
that's
a whole life
question that I had towards the end about taxes,
Yes.
how this has implications. All right. So let's kind of be summarizing this to see if I'm getting it. So but again, from what I gather, it is extremely important to consider life insurance early on, correct?
Right.
Because that's another question I have. I probably will leave it for the end, but I might as well just ask it right now. How does the insurance company calculate the premium for the policy that a person is buying? What do they consider? I think it's called underwriting, correct?
Right.
Yeah.
There's an underwriting process that goes on. What do they consider in calculating how much a person is going to have to pay for a policy?
Yeah, it's very important, the age, sex, and the health. So it's different. One person that is already 65 years old, male or female, they are different because the statistics, the probability of death is different for male and female. And also, life insurance policies are based on the health of the person. That's why the medical examination is so important. One person that have already one illness or take prescriptions probably is not qualified for life insurance.
So they can deny you?
Of course, life insurance.
They're not obligated to sell.
Life insurance is a business.
Okay.
So life insurance companies are business,
All right.
business for profit. So to be clear, because some people say, why they increase my policies?
Right.
Life insurance policy is not going to increase. It's going to be that price if they tell you that you're 30 years old, female, with no health, and you get 30 years policy for $10 a month. That's going to be $10 and nothing is going to happen there. But if you have some conditions, medical condition, you are not qualified for the best rate in the life insurance. Maybe some life insurance company are not going to offer you life insurance.
Right. Now, I did a little bit of reading this morning. I woke up super early, 2:30 this morning. It was pretty crazy.
Wow.
And I just couldn't go back to sleep, so I said, might as well just go and do research, right?
Yeah.
So the smoking is a big deal with these policies, right? I noticed that the people who smoke, they get smoked.
Well, not necessarily, David.
Okay.
You know, these are people that take those risks. Everybody who smokes understands that there's an underlying hazard smoking. So now you're considered a higher risk because why? You would be a greater risk to getting lung cancer, lip cancer, body
Right.
cancer, throat cancer, what have you. And that's a medical fact, right? If
Right.
you're a smoker.
Definitely.
So you're willing to take that risk. So the
You
insurance
being the
company-
insurance company.
No, the policyholder,
Oh, okay.
the person. You know,
Right.
you're taking that risk in your own hands. Every time you take a puff,
Right.
you understand that it may not be the best thing for your health, right?
Right.
So you're a higher risk
Of
because
course.
of that mentality,
Yes.
right? So the insurance company will rate you at a bit higher, not a lot, but because you're a smoker, you should be the prime candidate to go get life insurance. Because once you get the cancer, and knock on wood, right?
Right.
You become uninsurable.
Right.
So it's almost like
So as long as you don't have a diagnosis, you will probably pay a little bit more, but they still might sell it to you.
they will sell
They
it to
will
you
it at a
if you're
higher
in good
price.
health.
But once
Yes.
you have a cancer diagnosis, it's over.
Not necessarily.
Which I assume that it goes even for other conditions, right? It doesn't have to be
Yes.
for smoking,
and,
right?
and for
Babies.
smoking, we wait. Once you've had cancer, we wait 10 years after you become free of cancer.
Okay.
And then you can apply again.
All right.
But 10 years is a long time
Of
to
course,
be without
of course,
insurance.
of course.
A lot of people tell me, well, Yoli, I don't believe in life insurance.
Mm-hmm.
And I ask you, well, let me ask you a question. Do you believe in leaving your family without a home, homeless?
Right.
Do you believe in bringing your children to this world and not paying their education? Because in essence, that's what you're saying by saying I don't believe
Okay,
in life
let me
insurance.
ask you about the children's education. So you are saying that a policy would apply only if you die in that term, correct?
Right.
Yeah. Okay.
So say it was the 20 years, right?
Right.
And then you said, no, I'm not going to renew the policy because now I'm age 55, and now I'm going to have to pay $500 a month for the same policy that I was paying $35 for
Right.
when I was age 55. Who wants to pay such a
Right.
high increase, right? So let's say I'm not going to renew and I'm not going to pay the new rate because the difference between age 35 and age 65 is enormous. You know,
Right.
you're closer to the mortality table. So-
we have to go on another break, but let me just again. So considering that mortgage, if you have a mortgage, an insurance policy can cover that. Children's education, leaving money for the spouse, to kind of keep the standard of living. Final expenses, leaving a legacy. all those kinds of scenarios or things, areas could be covered by life insurance. Am I getting it?
Absolutely,
All right.
100%.
So we're going to be wrapping it up in the
Yes.
last segment. Stay with us. We're going to take a short break. This is AARP, Arizona Hispanic Connection, life insurance concepts and types. We will be right back.
Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for staying with us. This is AARP, Arizona Hispanic Connection. This show has been bumpy, and I love it. I love it that it's bumpy because this is not an easy subject for many of us.
It's not easy.
And I've been just trying to basically get us to talk more tangibles because there's a lot of concepts here, a lot of concepts. And I've been doing my best to just grab the tangibles and grasp, I should say, not grab, but grasp. And so, again, that mortgage, those kids, those kids' education, that money coming into the surviving spouse, that income, that final expense.
Maybe the parents.
The parents, yeah. So there's all kinds of options in life insurance. But I want us to focus just on the last one because this I think both of you wanted to or mention it during the conversation and I didn't allow you. Now I want to devote the whole rest of the time for this. So are there policies in life insurance that not only are preventive, which means you want to, prevent, but that you can also save, that it's like a saving mechanism?
Yes.
Shoot away.
Yes, there is. And they're not called savings and they're not called investments within our
they don't
industry.
Want to use that word.
What they are, they accumulate cash values. And
they accumulate cash value.
And
That's
dividends.
the terminology. And dividends. Okay.
And it's at a fixed rate. So if somebody out there has a portfolio and they say, my investments have really dropped. The market's not doing well. I'm very concerned because I'm so close to retirement. Well, it'd be nice to put it inside, within a life insurance policy. You could switch it over and you have a fixed interest rate. And in addition to that, if something happens to you, then there's that death benefit for your survivors.
Okay, so explain it to me one more time. So there is a preventive aspect of it where if I died, my beneficiary gets something, but even I can get something if I don't die or while I'm still alive?
Right. It's a savings. It's a plan. It's not a savings plan. It's an accumulated cash value.
And what is the name of that policy?
It's the whole life
It's
policy.
whole life, but
Yes.
it includes those
Yes.
elements.
So a portion of the money that you pay for your life insurance is placed in an account where it's being invested within the insurance
goes
company.
to the
Administrative
Yes.
expenses.
part goes to the cash value aspect
Yes.
of it, and the other one goes to just the normal one where if you died, your survivors,
Right.
so your
And
beneficiary
it's
will
all
get
within
something.
your contract. You don't
Got
see
it.
what piece goes here and what piece goes there, right? But that money continues to accumulate with an interest rate. And going back to your example where you would pay a policy over the next 10 years, right? So then you're down paying after 10 years, but the accumulated cash values continue to grow and grow and grow. And any client can say,
Wait, I don't think I got that. So,
Yes.
so that the 10 years, one aspect of that 10 year dies after 10 years, but then a second aspect of it doesn't? Did I get that right?
Nothing dies. No, let's go back 2 steps.
Yeah.
What it is a permanent policy that you decided that, hey, I've never had a whole life insurance in my life.
Okay.
I'm very interested now
Right.
because I would like to leave a legacy to my children.
Okay.
I only have 10 earning years of income. I would like to pay this whole life policy within 10 years. That's my time frame. right?
So that will cost you a fixed amount?
Yes, it's a fixed amount, so you don't have to pay for the rest of your life. And the reason you don't want to pay for the rest of your life is because you're going to be on a limited income, right? So now we're going to accelerate that. So
let's say it's 10 years.
Yes, 10 years.
Okay.
Right? So now you paid the death benefit. It doesn't matter if you're 100 years old.
Okay.
You've already paid for your policy.
Got it.
And the accumulated cash values will continue to increase. And some people say, Yoli, send me the dividends every month.
Mm-hmm.
That would be part of your portfolio.
Got it.
And the beauty of that is that it's a fixed interest rate that you're receiving. It's not playing the market. So if the market drops, you were still earning.
So it's a guarantee.
Guarantee. Yes.
Are they
and
expensive?
Fixed. Well, depending on the age, depending on the medical, like
They're
John
the most
said.
expensive, I understand.
You know what? Your idea and definition of expensive is all relative because at a certain time, it actually levels out where the amount of money that you put in is the amount of money that you can take out, and you still have death benefits.
Let me play the devil's advocate, John. What would be the difference then if rather than doing it through the life insurance policy, I open an IRA account? I mean, why not go the route of an IRA account?
Yeah, it's part of the portfolio, as Jolie mentioned, and that's very important to know what's your money and where you put the money.
Mm-hmm.
The life insurance is basically a couple of pennies that you give it to the company, and the benefit of these pennies is going to be a lot more. Mm-hmm. So the IRA, you put it in the market, could be conservative or could be more risky in stocks. But anyway, you're going to risk this money, and the most that you can get from this money is 10% a year. And the life insurance, you can buy your life insurance today and pay $10 if that's the premium that is going to pay for your policy.
Mm-hmm.
Pay today the $10 and die tomorrow in a car accident, and the insurance pay $1 million. So you don't know when you're going to die, but you are going to die.
Yeah,
so
but
the insurance policy is going to pay that. Doesn't matter if the premium that you pay was 1 month, 1 day.
Are you
10
talking
years.
about the part that it's a cash value part, or just the other?
You have a face amount in terminology of the life insurance. The face amount is the total value of the life policy that you buy: $1 million, $100,000, $10,000.
Okay, perfect. So let's kind of wrap it up, and I'm going to have to repeat this thing. So what I'm understanding is, okay, I don't have a policy for life insurance. I can see my kids. Oh, they should consider that mortgage, ensuring that mortgage is going to get paid. Okay. Oh, they have kids. Maybe they a term policy might work well because they want to make sure that those kids get educated and that surviving spouse will have money in case something happens. All right, but let me do even more. How about some funeral, what are those called?
Final expenses.
Final expenses. Oh, okay. I can include that also. Right. Okay. How about a legacy? Maybe I do want to leave, $250,000, $1 million, for my family. Okay. So all those can be included.
Right.
Am I getting it?
You are getting it.
Okay.
Correct. You are
So
correct.
let's see. What am I? So how about if I want to add that component where I don't want to just be thinking about what's going to happen, what others are going to get when I die, but how about can I get something out of it as well while I'm living?
So you would request a quote for a permanent insurance for the amount of value once you added all of your the reasons why you need this policy.
Right.
And then you can say, give me a quote for the term after 30 years and give me a quote for the permanent where all the money that I've put into it has been accumulated, and now it's you have dividends accumulating, and so you get the two. You can also do a combination of the two. Say that your total amount that you need is $500,000. You can say, it's kind of steep to pay the whole life in its entirety. So let's pay maybe $250,000 for the next 30 years that the house needs to get paid for, and then that ends. Why? Because that debt ends too. So that responsibility is no longer there. And let's get the other $250,000 in permanent so that I can have a good $100,000 by the time I retire.
So again, it depends on each case, obviously, like in everything.
Yes.
Yeah, I was just doing my very best to get those tangibles, right? Those things that that people need to be thinking about and that can be included. And now, can you on the permanent life policy, is there one option where you have a flexible interest rate that the money can gain versus a fixed one?
Yeah, there's variable policies and then all kinds of policies. But the main concept, is that there's one that's going to be permanent and one that's going to be term. One area that I really want to touch upon quickly here, David, is that a lot of my clients tell me, Yuli, I don't want to talk about life insurance because I already have life insurance at work. Well, when you know that your average American, average person switches jobs 8 years minimum in the United States, wouldn't it be wise to have something outside the employment?
What happens with that employment policy if they change jobs?
It's a group policy. So unless you're part of the group, you don't belong there anymore. And especially when you retire, off you go to retirement. You're no longer part of the group.
So you basically lose it?
Yes, you lose it. Wow. So a lot of my retired people that come and see me, Yoli, I lost my benefits. What can I do now?
Yeah. Just a simple question. I don't know if this is a real question, but I'll give it a shot. John, so would you think that term is better or whole life or permanent?
That have to be part of the need analysis.
Okay.
Some people, some financial advisors say, get $100,000 for 10 years and save the rest, and invest the rest. Okay. I think that's wrong. Every person is individual. And something very important, you can have life insurance when you're born. 1 day, 2 days. So babies and kids can have a juvenile.
Fits all. I mean, there's not just one size fits all.
Not all. And remember, the youngest that you are, the best rate that you can get in your life policy.
Got it. How about you? Do you have a kind of inclination into a term or whole life?
Now, John and I share the same views here.
Yes.
Okay.
And it's just depending on the client and the client's needs. What I like or don't like has nothing to do with the needs of the client. So if there's a term for a specific product, say your daughter wants to make sure that they pay off the house, we can do something simple, make sure that that's done. The other area is the children's education, right? That's critical for the next 18 years. We can also do the policies for the children. A lot of people say, I don't like to insure my children. But, who likes to do car washes in the corners, right? And ask for money or go into debt because of a funeral. It is so important to plan. The failure to plan is unacceptable with so many options available to all of us. All we have to do is ask. These appointments are at no cost to anyone.
So so how can people get a hold of you real fast? We have like 10 seconds each.
You can call the office at 623-848-6300 and ask to schedule an appointment to see me regarding life insurance.
Perfect. How about you, John?
602-795-4825, 602-795-4825.
It's going to stay on the video. I want to ask you again, if you're listening by radio, please join our page at AARP Arizona Hispanic Connection. This is all the time for now. We address life insurance concepts and types. See you next time, and thank you for joining, and see you soon. Take care.